I just want to make something very clear that one, I don't think the world is ending, but I want to articulate to you just how serious the world is taking this. And I'm going to show you 4 charts. This was posted yesterday. The stock market opened today. And since the posting of this article, from the names mentioned in the Citrini article, there's been a combined over $50 billion wiped out of the stock market. Amex was mentioned. Amex is down $20 billion. Visa was mentioned. Visa is down $20 billion. DoorDash was mentioned explicitly. DoorDash is down over $5 billion. MasterCard was mentioned. MasterCard is down over $4 billion. ServiceNow was mentioned. ServiceNow is down over $5 billion. Not even to mention Monday, Zapier, etc. All of this happened in one day from a Substack post from a popular macro Twitter influencer on X. This wasn't written by Jane Street. This wasn't written by Peter Thiel, Mark Zuckerberg, Bill Gates. This was written by a Twitter influencer on X. And so 3 things are true here. 1, posters run the world. A good poster runs the world. 2 is markets are forever going to trade more mimetic and more like crypto. This is just a fact. More markets are going to trade off vibes, off narrative, off stories, and like crypto. And the 3rd thing that is true is that there is some level of validity to this post, at least $50 billion worth of validity. That's a lot. 50 Bs wiped out. Boom. To recap, Citrini, who is a popular trader and macro research quant, posts an article and he basically lays out the AI doomer thesis over the next 2 years. He lays out a very clear scenario of what things going wrong would look like, okay? So the first thing that happens is the SaaS apocalypse is real. The first argument he makes is that the SaaS apocalypse is real, okay? And AI is fucking good. AI is fucking good. AI kills friction and it basically destroys jobs based off specialized knowledge or removing friction in extra steps, okay? Accounting, cooked. Travel agents, cooked. Things like DoorDash was explicitly mentioned in this article, completely cooked, okay? Because of this, how much of the stock market is built up on SaaS company revenues? A massive amount. So because AI is fucking really good, this leads to company margins get absolutely decimated, okay? $ cooked. Company margins get absolutely decimated, okay? Because their business, which relies on providing software to consumers or software to businesses, is now made hyper efficient. So the money that they make in between the margins, destroyed, okay? Because these companies are having their margins crushed, their earnings are down, their revenue is down, they only have one choice, okay? And the only choice they can make is AI spend up, human spend down significantly, right? It's the only choice you can make, okay? You're a SaaS company and AI has killed your margins because it's really good. You can no longer take the premium that you've been taking on businesses and on consumers, okay? Because of that, you're making less money. Because you're making less money, you only have one choice, okay? That is to spend less money on workers and fire your employees and to spend more money on AI, right? You get more output for cheaper. You have to find a way to make up the delta in your margins that you have since lost. This is the only natural choice, okay? And so firings going crazy, hiring's not happening, AI spend going up. Okay, so what happens next? AI spend up, employee headcount down. What happens next, my friends, is white collar jobs unemployed massively. I need a job. Okay, pretty simple how we get here. Mass unemployment of white collar jobs. Now, the problem with mass unemployment of white collar jobs is, Citrini lays this out, is white collar jobs, white collar work is responsible for 50% of the entire workforce and 75% of spend. Think about that. So AI is better than advertised. It crushes company margins. Because company margins get crushed, they have to make up for it somewhere. So they fire employees, spend more money on AI. Because they fire employees, white collar unemployment goes up significantly. And now it's like fun and dandy to say like, oh, permanent underclass, AI is going to take your job. Everyone's going to be unemployed. But the problem with everyone being unemployed is that white collar workers represent 50%, half of the workforce. Half of the workforce is white collar workers, and 75% of consumer spending is white collar workers. Okay. That is massive. That's a huge, huge, huge implications. Okay. And so what happens next is that AI spend goes up, AI capex goes up significantly, right? Every company is spending more money on AI, but GDP goes down. Okay. And the reason capex can go up while GDP goes down is that companies, SaaS companies in particular, are now able to get more output from AI with significantly less money than they were spending on their employees. Okay. But the thing about the delta, the money in between, the money between what they're spending on AI to get equal level output versus what they were spending on employees to get equal level output, is that doesn't manifest in excess cash. Okay. The money just evaporates because they're actually making less, because they're getting less contracts from consumers and businesses, because consumers are spending less because nobody has a job. And then companies are spending less because they're making less, because everybody else is making less, because everyone's spending less, because nobody has a job. Okay. And you sort of get this fucking death spiral where nobody can spend because nobody has a job and they don't have any money, so nobody can spend. And it fucking spirals. And so you get AI spend, AI capex goes up significantly, but GDP goes down. Okay. This leads right here to what Centrini articulated as a government revenue crisis. Everyone is making less. They have fewer paychecks. There's less taxes to collect because no one has a job. The people that have jobs are making significantly less. And in order to stimulate the economy and keep things at least flat, the government has to spend more. Okay? Everyone's making less. Government's taxing in less, and they have to spend more. It sort of leads to a crisis. Okay? And so the white collar workers is not just going to sit idle. Okay? So if you had a job at Salesforce, like we articulated in the article, and you were making $180,000 a year, that's a good job. Okay? That's a good job, making $180,000 a year as an engineer at Salesforce. You lose your job in the third round of layoffs. Okay? Are you just going to sit there idle, or are you going to go down the workforce and take a lower paying, lower economic valuable job? Well, you're going to go down the workforce because you have a husband or you have a wife and you have 2 kids to provide for, and the food isn't going to pay itself, the bill isn't going to pay itself, and the money isn't going to make itself. And so what happens is, that's a car, Uber, less money, is that the already compressed lower subsection of the workforce just gets more competitive. Okay, you have this mass of overqualified white collar workers that have no choice but to go further down the wage hierarchy. Okay, that means compressions get tighter. An already squeezed and struggling demographic is squeezed and struggling more, which means people are making even less, which means people can spend even less, which means businesses are making less, which means margins get more fucked, which means you have to fire more people, spend more money on AI. Government brings in less money, spends more to stimulate, and you get this negative reflex cycle doom loop that really has no stop in sight. And so what happens next is that the private credit market, that what Centrini articulated is basically a focused, correlated bet on the future earnings of the same companies. And so a huge portion of the economy is backed up on investors giving money to these software companies and basically betting that they are going to return the same level of earnings they're currently returning in perpetuity. Okay? That's how this works. As long as that game keeps being played, private credit, people's investments are safe and they're with good companies. Now, it was safe when they underwrote these contracts, but the game has changed, okay? Because these software companies are no longer able to guarantee X amount of revenue in perpetuity. That's being stress tested. That's being pressured, and those contracts are being broken, okay? And so this is basically going to lead to extreme stress and blow-ups across private credit, which we've already started to see the early signs of potentially with the Blue Owl news. Okay. And so what happens next? On one side of the spectrum, you have private credit, which has funded all of these SaaS companies and all these software companies to allow them to prosper. That's being stressed. On the other side, you have a consumer-led mortgage crisis. And so you have house here, and then right here in all caps, you have foreclosure. Okay. And so on the other side of the spectrum is you get a mortgage crisis. Okay. Because what's happening right now is that there are all these people, 50% of employed people in the United States are white collar workers. Okay. And they are 75% of the spending. Okay. So the people that are buying vacations, people that are buying mortgages, people that are buying cars, the people that are buying houses, the economy is reliant on these people. Okay. And so there are all these mortgages, 15-year, 30-year. I think they're talking about doing 50-year mortgages that people underwrote when they could afford them. Okay. Like imagine you have a mortgage when you are a Salesforce employee making $180,000. Well, AI comes out of nowhere. It takes your job. You get laid off. You are now making $45,000 a year driving for Uber because you can't get a job, because nobody's hiring, because their margins are compressed and they're spending all of their money on AI improvements. And so can you afford your mortgage? No. Can anybody else afford their mortgage? No. And so what do? You just stop paying it, and it leads to this mortgage foreclosure spiral. Now, the problem with this versus 2008, as I understand it, is that 2008 spiraled because they just wrote bad mortgages. They wrote bad loans. Okay. They shouldn't have been written in the first place. What's happening in 2026 is they were good mortgages and the people could pay them, but they just can no longer pay them because the circumstances have changed. And so 2008, the government comes out and they stimulate the economy with $900 billion. They basically buy up all the bad debt. They buy up all the shit mortgages and they save the economy because people are making money. People will be able to afford their houses. They just have to get out of this debt spiral. The problem with this thesis coming true through 2028 on the Citrini article is that no amount of money can stimulate this economy, because it isn't like these people can pay their mortgages. They are just in debt. They're just over leveraged. They're just over financed. It's like, no, their value, the economic value they provide to the world is their human intelligence, which is now being seen as a commodity and it no longer has economic value. And so stimulating the economy is not going to allow someone that is now making $45,000 a year driving Uber to get back their $180,000 a year job as an engineer at Salesforce. That job is gone. The job is gone because Salesforce can't pay the salary because they don't make any fucking money anymore. And the money that they do make is spent on improving AI because it's the only way for them to continue their business being built profitably and evolving profitably, right? And so the job doesn't exist anymore. And so no amount of bailout is really going to, again, as Citrini predicts, stop this synonymous spiral of private credit and a mortgage crisis, okay? And so he uses the word no natural break a bunch of times in this article because the entire article is predicated on the idea that AI and intelligence is just going to continue to get better. And if you bet on artificial intelligence continuing to get better in an up-only slope, you're fundamentally also betting on human intelligence getting less valuable. And nothing can really stop this trend as we know it, right? Nothing's really gonna, like, what can stop this trend? It's not exactly clear what would stop this. If you believe artificial intelligence gets better, human intelligence gets less valuable, companies and businesses will continue to spend less money on headcount and more money improving AI. As the AI gets better, their margins get better. They can hire less people and focus more on the artificial side. Okay. And so basically where this leaves us, and the thesis that is being articulated, is that for the first time, we are basically predicting that new tech will not equal new jobs, which is a very sobering, eerie type of thesis if true. It's like, okay, you get the Industrial Revolution and, you know, everyone's a farmer. A lot of people work the land. Industrial Revolution comes and people are terrified. Like, oh my God, no, everything's going to be automated by factories. And it's like, no, well, you need people to work the factories. You get the creation of the automobile industry, right? You get the creation of factory workers. You get thousands and thousands and thousands and thousands of new jobs to stimulate the economy. And so the value of human work doesn't disappear. It just gets evolved. It just changes. Okay. The jobs changed. And so as jobs get removed during the Industrial Revolution, new jobs get created. Okay. Same thing when the internet happens. You get the creation of the internet and people are panicked. Like, oh my God, what do we do? The internet's going to take all the jobs. Nobody's going to be able to work anymore. It's like, no, a lot of people lost their job because of the internet and then they just made new jobs. Okay. I mean, look at the article we are reading is from a Twitter influencer, a Twitter researcher, a macro thinker, a macro researcher on Twitter, whose majority of their business is predicated on a paid Substack subscription on the internet. It's like the thing that we're reading was a job created by the internet, right? So the internet creates this massive slew of jobs. There's online and there's a million things get created from the internet. OnlyFans. You get OnlyFans and you get streamers and you get drop shipping and you get sneaker reselling and you get clippers and you get e-girls and you get content creators. You get the internet economy, which eats the world. You get YouTubers. You get e-com isn't even a thing before this, right? And so the internet comes in, it changes the world as we know it, and it creates an entire economy of new jobs. Okay. Now, the doom thesis creates an entire world of new jobs. Okay. Now, what is being described here is that AI is the first new technological revelation that will take jobs and not create jobs. That's a pretty daunting theory because, I mean, the future of the United States economy is basically predicated on AI will be an economic boom and it will make new jobs and people will continue to work in the workforce. Now, what was laid out by Citrini is basically like, no, yeah, you need people to prompt AI. AI is better at it. You need people to manage AI. AI is better at it. You need people to design AI. AI is better at it. Any new job that you could hypothesize would be created via AI, AI is better at it. That's the thesis that was laid out by Citrini, and that sort of breaks our social contract of the economy right now. And so what he predicts is SPY minus 57%. And the government really has no choice but to mass print our way out of it. But the problem with mass printing our way out of it is that it doesn't really solve anything because you still can't pay your mortgage because you still don't have a job because it's been automated away by artificial intelligence. And so this is the entire thesis to recap what we just read is one, SaaSpocalypse is real. AI is better than advertised. Jobs based off specialized knowledge or friction are gone. Accounting, travel agents, DoorDash. Because of this, company margins get crushed. All these companies are forced to fire aggressively and increase their AI spend. This leads to a mass unemployment of white-collar jobs. Now, the problem with laying off white-collar workers is they're 50% of the workforce and 75% of the consumer spending. They're basically the US economy, okay? This means AI CapEx goes up, GDP goes down. Everyone's spending more on AI relative to what they're spending right now, but they're spending less in general because there's just generally less money, okay? We're calling this deflation. This leads to a government revenue crisis. Fewer paychecks, less money to collect on taxes, and the government has to spend more to keep things stimulated. Okay? These white-collar workers don't sit idle. They basically downgrade their jobs and their lifestyle. That was the example of the Salesforce employee making $180K, now making $45K a year driving Uber. The lack of forward earnings for these companies puts extreme stress on private credit. We're already sort of seeing it with Blue Owl. And then in its own silo, synonymously, there's this mortgage crisis, which is that nobody can afford to pay the mortgage that they underwrote when they're making $180K a year, when they're now making $45K a year. Okay? There's no natural break because as AI gets better, it only increases demand for AI and decreases demand for human intelligence. And it's not like the US can backstop these mortgages and just print us out. And the final snipe nail in the coffin thesis at the end is it's the first tech innovation that deletes jobs and doesn't create any new jobs. Okay. And so Citrini is predicted 57% in this story, fictional story, 57% dump on SPY back to pre-2022 levels, and the government has no choice but to basically print our way out of it. Okay? Subsidize. If you lost your job for AI, here's UBI. Everybody's getting paid. It's like there's one or two things. If you lost your job for AI, here's money from the government. Or because the AI companies are making all of the money, they have to now share it with the consumers. We're going full socialist. One of the two things is probably going to happen. UBI on two sides of the coin. Okay. It feels if this scenario plays out. Now, I'm not backing the scenario. I'm just re-articulating it. Okay. I'm summarizing it. Okay. But he basically predicts those two things. SPY gets destroyed. The US has no choice but to print our way out of it and spam UBI to everyone because everyone's miserable and the economy desperately needs to be stimulated. Now, something to understand about this scenario, which we're calling deflation, is that nobody that's alive has actually traded deflation before. We've not traded a deflationary economy before. And so I don't really know what the trade is here. I don't think anybody really knows what the trade is exactly, but this is the type of scenario, if it were to occur, that they would make the movie about or write the book about the person that figured out what to buy when everything broke. This is that type of scenario. You get a 2008 type of opportunity if this were to play out as Citrini articulates. They would make a movie about you. If you made this trade, they would make a movie about you. Yeah, this is that. And so finding this trade and finding what to do if this scenario is true is probably the single most important decision that you'll come to over the next couple years. It is. It is. Now, I say it like that because it's one of these scenarios in which we have to decide for ourselves, do we believe in this? Do we not believe in this? Or what parts do we not fundamentally believe in? Okay. Pretty funny that after all that ink spilled by the less wrong rationalists, the two things that finally moved public consciousness on AI safety were an LLM generated slop post by a fraudulent startup founder and a weekend sci-fi primer from a financial analyst. The world is run by the bold and Epstein-matically brazen. Never forget that, bucko. Period. The value on being a good poster, understanding narrative and understanding thesis is the highest it has ever been. The highest it's ever been right now in this moment. If you can understand why things trade the way that they do, I said Epstein-matically is crazy, epistemically. Point still stands. And so there's a chance that this is just deflation. It's where we're heading and that Bitcoin's been front running it. There's a chance Bitcoin's been front running it, which is what I articulated the first time Bitcoin dumped. And I said it feels like it's sniffing out broader weakness across everything. But figuring out what you believe to be true from this article, what you believe to be fiction, and what you think the second, third, and fourth order effects are will absolutely lead to asymmetry God trades in the market. There will be some of the biggest winners of all time trading the uncertainty into AI. And my entire focus is going to be to figure out how to navigate this. This is all we're going to talk about. How do we navigate this? Where we're going. It's a new world. I think we're doing a pretty damn good job of it, covering it, being the most relevant, the most on the ball. And that's my summary.